There could be some more good news on the global inflation front. Senior economics reporter Steve Leisman joins us with that story. Good morning, Steve.
Morning, Kayla. Yeah, global food prices have fallen for the first time since Russia's invasion of Ukraine, and global energy prices have mostly been down while supply chains are clearing. The result has been falling overall inflation, not just in the U.S., but also globally, with J.P. Morgan forecasting sharply lower inflation around the world and in the U.S. and in Europe next year. Goldman Sachs writing just yesterday, supply chain recovery and the deflationary impulse in the goods sector that it promised to bring took much longer than we expected, but have finally arrived. We expect this ongoing process to push core goods inflation negative next year. J.P. Morgan sees the trend happening globally and believes central banks will follow it. They wrote over the weekend, our view that core inflation will continue to run at 0.2 to 0.3% month on month should allow most central banks to pause at the end of the first quarter of 23, even as inflation remains above target. U.S. data on Friday showed outright core goods deflation. That's according to the 3-month annualized figures that were calculated for us by RSM. But the core service sector, ex-housing, that's the one Fed Chair Jay Powell is focused most on. It does remain sticky. Now, whether that measure comes down will help determine, does the Fed raise to 5% and stay there, or above 5% and stay there, or does it cut, as markets now predict? Key risks to the global inflation outlook cited by almost all the forecasters we read over the weekend cite energy and food prices, along with the possibility that higher wages pass through to consumer prices. Kayla?
Well, Steve, I want to ask about lower global inflation because it's sort of a double-edged sword. I mean, on one hand, yes, demand is lower because rates are going up. But on the other hand, how much of that is because there's potentially a recession on the horizon in other parts of the world? And how does that factor into what's going on here?
I think some of the decline in global prices is because of weaker economies, but also you have supply chains clearing. You also have the what's happened in terms of energy prices. They found a way, it looks like, in Europe to put a cap on what's happening with energy prices there. So yes, it is double-edged sword in terms of part of it being from weaker economics, but also a clearing from the pandemic supply problems.
How much more do you think the Fed needs to see before it wants to pause? I mean, the market thinks that it's going to need to start cutting rates in the middle of next year.
Yeah, that's right. I think the Fed is really focused on that core services measure, ex-housing, and they want to be sure, I think, that what's happening with the tight labor markets. There was a report this morning in the Journal that those who are losing their tech jobs are finding them very quickly. So this labor market does appear to remain pretty tight. And so the Fed's going to want to be sure that we don't have this wage push inflation coming through.
Steve,
it might take a couple months before they feel secure about it.
Steve, I was reading that story. Were you surprised by that story? I mean, I think there was a lot of fear.
Not at all. I've been talking about it for a long time, Andrew, because the data show that while we're reading all this anecdotal evidence about these layoffs, the data is not showing up in terms of big increases in jobless claims. We do have the continuing claims going up ever so slightly, but the unemployment rate remains low, and all the other indicators we have about wages
thought the fascinating piece was
market remains
we've
tight.
been talking about tech specifically and how the Valley was being impacted, and whether if you lost a job in tech, were you going to get a job in tech, or were you going to get a job elsewhere? Meaning, in a world where venture capital wasn't, plowing into new startups, where a lot of these big companies weren't hiring, were the jobs going to be in the same space, or were they going to go elsewhere?
Well, I can't say, and certainly we'll get some angry emails from some people who are having difficulty finding work, Andrew, as is always the case. But before we went into this, we had a deficit of trained engineers, trained software engineers, and especially, by the way, Andrew, what I've heard is that it's really tough in the hardware sector. And that is, I think, a difficulty where some of your software engineers do not necessarily pass right over into the hardware sector. But overall, we went into this with a deficit. And so, yes, there is some loosening up of the labor market in the Valley there. But it appears to be, according to at least that one survey, and also, by the way, the data that we're looking at, that people lose their jobs and seem to be finding them relatively quickly.